It's relatively easy for me to imagine Solana being $1 trillion asset.
Today I sit down with crypto veteran and CIO of Bitwise, Matt Hougan,
And that conditioned me for crypto because what is crypto?
about what's actually next for crypto in 2026.
Paul Atkins says the entire capital markets is transitioning onto blockchain-based rails. Larry Fink, the CEO of BlackRock, says every stock, bond, and fund can be tokenized. I think we should listen to those people.
We talk best altcoin buys with the most potential.
I think it's easily $1 trillion asset, which is a 10x from here.
And Matt sounds the alarm for Bitcoin holders.
Worst case scenario, nothing is for sure. What is your worst case scenario?
What catalysts could push this Bitcoin crash down further?
The worst case scenario, catalyst there would be...
Highly recommend you watch today's entire video so you understand everything. Click the like button to support me, and let's start.
But would you just start with your background and how you found crypto?
Oh, wow. Sure. Absolutely. Yeah. So I'm the CIO of Bitwise, specialist crypto asset manager, about 15 billion in assets under management. I came here from the ETF industry. So before I joined Bitwise, I was the CEO of ETF.com, which created the first ETF data and analytics system. We, of course, now all know about ETFs in crypto because of the intersection of Bitcoin ETFs and Ethereum ETFs, soon Solana and other ETFs. They've been a big asset management space. But before that, they were this disruptive area of finance. So I know everyone today thinks of ETFs as the primary way traditional investors invest. But when we started ETF.com, people actually hated ETFs. They were called weapons of mass destruction. There were congressional hearings about ETFs destroying the American dream. Big companies didn't want to build in the ETF space. And I sort of saw that industry, which had a better investing technology, become dominant in a market. And that conditioned me for crypto because what is crypto? It's like a financial technology that traditional finance didn't believe in, that the media hated, that Congress had hearings about, but that was better, faster, cheaper than an alternative. And so once I sold ETF.com, looked around, decided what was next, and knew I was pivoting into crypto because I saw the same sort of patterns set to play out there that played out in ETFs in the first part of my career. So I've been at Bitwise for almost 8 years now, and plan to spend, the next part of my career continuing to build in crypto.
So when they were having congressional hearings about bad or good ETFs, was that the early 2000s or late 2000s?
Early 2000s, yeah, exactly right. Yeah, they were going to destroy the economy and wreck the American dream, which is just laughable at this point because now they're the apple pie of investing. But it just shows you how the world can change its view. You actually see it happening in crypto. Even 5 years ago, the world was so much more skeptical of crypto. The media was so much more hostile. Certainly, the regulatory environment was so much more hostile. And we started to see that change. I think the lesson from ETFs is it can swing all the way to the other side. So not just that it's grudgingly accepted by finance, but that it is embraced by the world as a strongly positive thing. I think that's the direction we're going. And it's just a matter of time.
So when you first found Bitcoin, did you get it immediately? And besides, it was an asymmetrical bet. What aspect of Bitcoin drew you in?
No, man, I missed it twice, which is unfortunate. So the first time was in the early days of ETF.com. I had these young analysts working for me, and Bitcoin crossed $1. And we had a meeting for an hour where one of the analysts led a conversation around what Bitcoin was and why it was going to be worth $1 million. He went on to become the first Wall Street analyst to cover Bitcoin. And I didn't get it at that meeting, which is much to my chagrin. The second time was in 2013 when I was running the largest ETF conference in the world, and the Winklevoss twins filed for an ETF. And I brought them down to speak at my conference, not because I really got Bitcoin, but because I thought the audience would love to hear from them. And it was that moment that started me on my journey because the lawyer for the Winklevoss twins was a good friend of mine, and she was highly respected in the ETF industry. And she actually took me aside and said, Matt, this Bitcoin thing is more important than you're probably giving it credit to. So that sort of started to open my eyes. What actually got me over the line was understanding sort of the elegance of the technological solution and what it meant for digital property rights and what it meant for the speed of global transactions. I'm sort of a first principles person in that sense. And once I saw the elegance of that, I saw the inevitability of that and knew that, Bitcoin and crypto was where I was going to be focused.
So let's bring it into today. What's your
Yep.
crypto investing thesis for Q4 of this year, understanding there's 8 weeks left?
I'm very optimistic for Q4, actually. I think let me see. I have a few reasons for being so optimistic. One is that I think crypto native sentiment has mismeasured broad crypto sentiment. So I think the crypto market is increasingly driven by the marginal buyer, which is a traditional investor moving into this space. I think historically it's been driven by crypto native investors, but I think the marginal buyer is actually like a financial advisor or a family office. And I happen to interact with those folks all the time, and they're as bullish on crypto as they've ever been. And so I think what we're going to see is continued inflows from that audience in Q4 that's going to lift price. The other thing I see is I think the market has mismeasured the probability that we get things like the Clarity Act moving forward. I'm more optimistic on that than, say, Polymarket is. And I think it's probably mismeasured the direction of the economy and broader assets, which I think will be strong in Q4. When I put all those things together, I think we're going to set new all-time highs in Q4. So my investment strategy would just be to stack sats while you can at 115 because I think it's going higher.
So whether it goes higher in the next 8 weeks or into 2026, to me, and correct me if you disagree, I think based on some of the stuff you said, we're seeing one of the best macro setups of all time for Bitcoin and crypto. We've already had the leverage flush out, just happened in crypto, very healthy. New Fed chair coming next year, which is projected to be bullish for all markets. The SEC and the CFTC very bullish on crypto for the first time in history. Crypto has been a scourge on traditional finance until today, and we've done well in spite of it. Now we have it. And then also the market structure bill, like you set up. Do you disagree with any of that?
No, that's exactly right. Institutional purchases every week, ETF inflows going up, approvals on platforms like Morgan Stanley and Bank of America and Wells Fargo unlocking huge new markets. Bitcoin ETFs just listed in London for the first time. All of those things are correct. The incredible thing is that the market is so depressed despite all of that incredible good news that makes me very optimistic.
So, yeah, let's go into that a little more because Altcoin Daily speaks to an audience of over 3.5 million across all social platforms. One of the biggest questions we get asked is why is the market so subdued?
I think it's a very good question. I would love to know your thoughts on it. One meta reason is I do think there's been a substantial number of existing old holders of crypto who were willing to part with Bitcoin in or around $100,000. And I think it's taken longer than the market expected to work through that sell wall and get the actual uplift. The other thing we is that we've had a very uneven and unusual altcoin season. And I think many people anticipated we would have a traditional all assets lift altcoin season. And instead, we saw a variant of it where there was sort of an altcoin rally in digital asset treasury companies, and then altcoin rallies in certain coins, but not others. And I think the fact that it didn't pattern match depressed people. And then maybe the last thing I would say is I think people incorrectly assume we're at the end of the 4-year cycle and 2026 will be down. And so they're sort of positioning themselves for what they see as that inevitability. I strongly think that's wrong. I think 2026 will be a good year. And so maybe if you put those three things together, you can understand why people have been disappointed so far and why they're pessimistic in the face of all the good news you laid out.
True. And to me, the fact that we're subdued, but we're still up for the year suggests that we didn't have a blow off top yet. Crypto has superseded the 4-year cycle, and that's incredibly healthy, for continued gains. Let me ask you this. You said that new all-time highs by the end of the year. Where could Bitcoin be if it passes 125?
Yeah, look, I think it rips straight to 150, and then whether it goes above that or not remains to be seen. Our official forecast from December of last year was $200,000 Bitcoin by the end of the year. I still think that's possible, maybe unlikely, but possible. But I do think there's probably an air gap between 125 and 150, and we would run up quickly if we got above that. October, November, historically great months. December, historically a pretty good month. The debasement trade is raging. I think there's a lot of reasons to be optimistic into Q4.
Let's talk about the inverse then. Worst case scenario, nothing is for sure. What is your worst case scenario?
Yeah, Bitcoin dips below 100K and falls down to like the 75K level. I think that's not impossible. Back to where it was pre-Trump election. I think that's the worst case scenario. Catalyst there would be reversals in ETF flows. Catalyst there would be the Clarity Act really running afoul and being written down to zero. Um, Maybe the economy going off the rails and broader asset prices stumbling into the end of the year. I think if you get those sorts of things, you could see that kind of downturn. So yeah, nothing is guaranteed. There is always risk. I think there's more upside than downside, but I could see that level of pullback back to where we were pre the Trump election.
What don't people understand about the market structure bill?
About the market structure bill, I
Because
well,
it's huge. It's huge. And it is the biggest piece of crypto legislation that we have ever seen. And so obviously there's a learning curve. What
yeah.
changes after that?
Well, broadly, they don't understand everything. So we could start at if you talk to the average investor, they don't understand why we need a market structure bill. I could explain that if that's helpful,
Please.
but sure. We don't know how the fundamentals of crypto work in the market today. So we don't know beyond Bitcoin if an asset should be regulated by the CFTC or the SEC. We don't know as we look into DeFi how traditional banks and regulators will treat DeFi protocols and how liable different people will be for those aspects. Uh, we don't know how a new project that bubbles up should be regulated, should be legal or illegal, should be open to US or foreign investors. What does all that uncertainty mean? When you're operating a business and the regulatory lines aren't clear, you don't go right up to the edge. What you do is you stay well on the conservative side because the penalty for going over the line is effectively corporate death. You get sued by the SEC and you collapse. As an example of that, I have an index. The index can't hold securities. The SEC won't tell me which crypto assets are commodities or securities. So I need to make a determination of which assets we can consider. I don't go all the way up to the line of what actually might be there. I need a buffer. And what these buffers and this uncertainty means is traditional finance can't aggressively build in crypto by a factor of like 10x versus what they want to do. Firms like mine that are crypto native spend a huge amount of money wrestling with this legal and regulatory uncertainty that prevents us from doing other business. Entrepreneurs who might build a very exciting project probably restrain themselves from doing it because there's too much risk if they go over the line. Think about why Polymarket struggled for so long to get off the ground because it was in a regulatory gray zone. Once you have that regulatory clarity, you're going to see 1,000 Polymarkets. You're going to see 1,000 businesses as disruptive as that building on crypto, in addition to Wall Street building on crypto. So that's at the core of why with this Clarity Act really matters.
Do you, where do you see crypto in 5 years? Do you take the Michael Saylor approach that it's Bitcoin will appreciate 60% year over year and then 55 and then maybe settle around 30 5 years from now, but it's the new hurdle rate? Or how do you think about it?
Yeah, I mean, we just put out our long-term capital market assumptions for Bitcoin. We called for, I think, a 28% compound annual growth rate for the next 10 years. There's a lot of math and data behind that, but that's where we ended up. I do think that that is the appreciation rate we'll see from this asset going forward. For what it's worth, is much slower than it's been. It's been 60 for the last 5 years and 80 for the last 10. So but it's much higher than it is for any other asset. The same prediction from Wall Street for stocks is 6%. So Bitcoin growing roughly 5x the equity market for the next 10 years per year really compounds over time. So that I do think that is the hurdle rate for capital once people are comfortable allocating to it.
If crypto had a magnificent seven, let's just take it down to magnificent five.
Oh,
What five protocols do you think should be included?
Look, I think this is going to get me in trouble with Twitter no matter what I say. So I'm gonna tread carefully here. There are a lot that could be considered. I think right now, if you look at Bitcoin, obviously the largest going after the largest addressable market. I think Ethereum and Solana, with Ethereum the clear leader, but competing strongly in the stablecoin and tokenization space. I actually think Chainlink is a critical infrastructure piece that fits into that economy. And then maybe I would leave the fifth one open because there are so many options there that depending on who you talk to, you could be convinced. From a market cap perspective, obviously XRP would be amongst that list. From a stablecoins perspective, you'd actually have to look at Tron in terms of its share of the USDT market. From a maybe a DeFi perspective, there are a lot of options there. Something like Ondo or something like Uniswap would be interesting assets to consider. But I do think those maybe near on the AI side, although many people have questions there. But I do think those four are pretty critical to where crypto is going forward. If you think the big use cases, the most obvious use cases that are transparent to us today are digital gold and platform for stablecoin and tokenization. I think maybe the obvious choices are Bitcoin and then some combination of ETH, Solana, and Chainlink, and maybe something else on that other side.
When you hear the SEC is going to tokenize everything, do you think that happens on one protocol, Ethereum or Solana, let's say, or split 50-50? How do you think about it?
Ooh, great question. I suspect it's on, well, I don't know, I should say. And so the way that I invest in it is I own an index, a basket-based approach. One mistake I think investors make is having high degrees of certainty about which asset is going to win. I have a high degree of certainty that tokenization is going to win, but between ETH and Solana, et cetera, low degree of certainty. So I just own them all. My guess is the base case you would guess is there's some sort of oligopoly. Maybe, the old sort of markets tend to break down 60, 30, 10 in tech. I wouldn't be surprised if you saw a 60-30-10 split for asset tokenization amongst three sort of leading blockchains. But I could, again, the way I invest is just to own the market.
You have called, though, Solana one of the greatest setup trades of all time. Why?
Yeah, because it's so small relative to its market opportunity. So I do think the way Solana is positioned right now, where it has a legitimate shot at being a major winner in stablecoins and tokenization, even though Ethereum has a larger share, um, Solana is such a small asset. It's 1/5 the size of Ethereum. It's 1/25th the size of Bitcoin. It could double or triple and still be like half as big as ETH. And given the share of revenue there and given some of the momentum there, I don't think that's out of bounds. So just because it's such a small asset, and because I think we're going to get ETPs soon, we're going to see inflows into that space. It just has a lot of appreciation potential on a relative basis before it catches up with norms. And I don't think people realize that. If you look at crypto media coverage, it's kind of roughly equal between Bitcoin, ETH, and Solana. And they're not equal at all. Again, it's 25, 5, and 1 is the market capitalization spectrum there. And I think because it's so small, it just really has tremendous upside.
And you mentioned before with Bitcoin, 28% year over year for the next 10 years. Where does that put the Bitcoin price in 10 years?
Yeah, it gets us to $1.3 million by 2035. Um, and I actually think that may be conservative, but that's what our numbers ended up with is 1.3 million by 2035.
And let's say, this is not financial advice. Half the fun of crypto is speculating, but where could that put Solana?
Yeah, I mean, look, I think Solana is its own story, but it's relatively easy for me to imagine Solana being $1 trillion asset. You don't need much growth on stablecoins and tokenization and much share wins there. And you end up at valuations like that. Paul Atkins says, the entire capital markets is transitioning onto blockchain-based rails. Larry Fink, the CEO of BlackRock, says every stock, bond, and fund can be tokenized. I think we should listen to those people. And if that happens, and if Solana wins an increasing share, I think it's easily $1 trillion asset, which is a 10x from here. I don't know the time frame on which that happens, but I can easily imagine that happening over time. Again, not investment advice. It's not.
Uh-huh.
It could equally not succeed at capturing those markets, or those markets could not scale, or the value capture could be different than I see it today. But I do think it has that kind of potential.
100%. And I appreciate you saying that because that is as new people enter the space, we want to show both sides of the Bitcoin. Matt, if you have one, what is your take profit sell strategy? If we're seeing these peaky levels, if we're getting
Yeah.
topping signs.
Yeah. So I don't tend to sell in my personal portfolio. But I think it's rational for people to think about asset allocation bands. So if they have 5% of their portfolio in crypto and it gets up to 10%, maybe you should sell back to 5%. It really depends on your level of conviction and your ability to take risk. I don't tend to sell because I can take significant risk in the crypto side of my portfolio, and I have a separate portion of my life that is in other assets as well. But I do think for many investors, thinking about what percentage of your portfolio should be in an asset, and then if it gets higher, maybe you want to balance back to that original starting point. The data suggests that that's a reasonable, rational strategy for many people.
I love it. Matt, this is a fun question, but at
Okay.
the fun, but at the end of the night, when you're alone, what keeps you up at night? What are you scared of?
Well, vis-a-vis crypto, I'm mostly scared of regulators making a muck of it. So, particularly when you get outside of Bitcoin, even if you're talking about something where people are extraordinarily optimistic, like stablecoins and tokenization, and particularly if you're talking downstream about something like DeFi, the scale of those opportunities are really going to be impacted by what happens in things like the Clarity Act. The Clarity Act could be good or it could be bad. I'll make a concrete example of this, borrowing from the Genius Act. The Genius Act is a great act if you're bullish on stablecoins, and I think will drive stablecoin AUM up significantly from 300 billion today to what the US Treasury says $3.7 trillion by 2030. But within that act, there's a rule that prohibits stablecoins from paying interest, which strikes me as absurd and anti-consumer. If stablecoins could pay interest, I think that $3.7 trillion would be $10 trillion, right? So I do think that's an example of how regulation can be imperfect. If we see like the Clarity Act be deeply imperfect and maybe it dramatically impairs DeFi, or maybe it assigns liability to DeFi developers that they don't deserve, or maybe it puts the classification of different crypto assets in the hands of the administration, which can change every 4 years, that could constrict the scale of the opportunity for that really important part of the market outside of Bitcoin. So more than anything, regulatory and legislative missteps is what keeps me up at night.
Matt, thank you so much for sharing your time. I want to have you back on in 6 months, revisit some of this stuff, but just final thoughts for the Altcoin Daily audience.
Yeah, look, I think this is the best time in history, as we discussed, maybe to invest in crypto. I do think a lot of risk has been removed from the crypto market. Despite what I said, a lot of regulatory risk has been removed with the introductions of ETFs and things like the Genius Act. I think trading risk, custody risk, adoption risk, technical risk, they've all come down. And yet, crypto is still a non-consensus bet. Most traditional investors haven't yet allocated. So I see substantial upside remaining and reduced risk. Do I wish I had bought Bitcoin when it was $1? Of course I do. But do I think now may be the best risk-adjusted time to buy Bitcoin in its history? I think that may be true too. So that would be my closing thought for the audience.
And one more question. When I spoke at Bitcoin conference this year, and on stage was like the CEO of Kraken, Robinhood leadership, Kraken, other leadership. It was just the Bitcoin ETFs were over a year or a year old, and still 6 months ago, at the beginning of 2025, the talking point was most of the professionals couldn't recommend Bitcoin ETFs to their clients yet, even though so that's still upside remaining. Now we're about almost 2 years into the Bitcoin ETFs. What percent can recommend? Are we still early on that?
We're just getting to the middle innings, believe it or not. Actually, just a few weeks ago, Morgan Stanley, which is the largest broker, finally said their advisors could recommend up to 4%, just a few weeks ago. And there are still a number of large platforms yet to come. So I don't know if we're 50% there or 60% there. We've made real progress, but there is a whole nother category of investors who still can't access these funds. I know that sounds crazy, but that's reality. So, yeah, every month that goes by, we make a little more progress. Eventually, we'll get there, but this is a multi-year story. It's not a 1 year and done.